Hello, Realtors of Maine. This is Lawrence Yoon, Chief Economist with National Association of Realtors. We are in unprecedented, we have never seen anything like this in terms of the economic lockdown, and many people have natural concern about the direction of the economy as well as the housing market. So Suzanne asked me if I could do a short video on my best assessment of where we are and where we are likely to go. So I will try to be brief and provide with some statistics that I have been seeing and monitoring. So if I can, let me sure that move the slide from my end. Oh, 1 second, there we go. So the economy was quite strong beforehand. And for some realtors, you remember this time last year, we had President Trump visit the Realtor Association in the mid-May, and he addressed that all the economic figures were just positive, lighting up better. 2019, we saw just modest slowdown, but still expanding. So we were still moving ahead, maybe not as speedily as before, but 2020 has become a big question mark, and it will certainly be negative to have shut down the economy for 2 or 3 or even 4 months. There's no way to make up for that once the economy reopens. So it will be negative, and certainly in the second quarter, every economic data will be off the chart ugly. Now, once the economy reopens, hopefully by third quarter, that it will also be off the chart positive. But some of the positive indicator, I think, will not be fully able to compensate for the loss that we suffered during the second quarter. But nonetheless, it's going to go to quite a wild swing in terms of the economy. The state of Maine, the job market, this is as of February, so pre-pandemic period. And one can see that in the middle of the chart, during the Great Recession, subprime lending foreclosure mess, job losses. But since that time, these jobs steadily rising. Looking at the housing statistics from the state of Maine shows that roughly about 10,000 homes were sold during the 2008-2009 period, only about 10,000. But you were reaching up to 18,000 recently. In 2019. So a very solid gain in home sales. Home prices are just steadily rising and rising and rising thanks to the steady boost in the jobs in the state of Maine. The unemployment insurance filing was quite a shocker. The number is clearly off the chart. This is the U.S. numbers. People have heard, 6 million filings in a single week, followed by another 6 million. So the numbers are extraordinarily high. And when I look at the state of Maine, it is also off the chart from the state of Maine perspective. But interestingly, that in the most recent week, the number of people filing for the very first time was not drastically higher. And I think the realtors all know that NAR worked so hard from the advocacy position to assure that the independent contractors, self-employed entrepreneurs can also tap into the unemployment insurance. This is a government-imposed economic lockdown. This is not fault of the entrepreneurs. Americans were making all the right decisions, business decisions. Americans were working hard. But given the government order economic shutdown, please tap into the resources. The federal government topping out at $600 per week on top of what Maine will offer. So it could be, something close to $1,000 per week. So each week that economy shut down, you should tap into the resources because the spirit of the government stimulus is to say it is not the fault of Americans. Government imposed a shutdown, so they should not suffer financially from this lockdown, or at least hopefully many people see some level of comfort in terms of getting some relief in the interim. Home sales on a nationwide basis, following what I mentioned about the state of Maine, so very low point in 2008, 2009. I want to pinpoint towards the little red arrow that you see. a little downturn. That was the period when mortgage rates were 5%. Any industry professional who see the mortgage rates for a long period would say mortgage rate of 5% is very favorable, but people were accustomed to 4% mortgage rates. So mortgage rate going from 4% to 5% actually brought down home sales. And then when the mortgage rate retreated back down to 4%, home sales began to pick up again. Today's mortgage rate is not 4%. It is closer to 3%, with the possibility of even going to 2.8%, 2.9%. So once the all clear signal is given, the economy reopens. And always, even in the toughest time, about 70% of Americans have secure employment. So they will be responding to that low 3% mortgage rate condition. So there would be buyers quickly coming back. Maybe we cannot fully compensate for the loss in sales during the spring buying season, but the buyers will be coming back. 70% of people with secure employment, 3% mortgage rates, these are very positive indicators to boost home sales. If there was a one challenge for the housing market pre-pandemic was the inventory shortage, hearing consistently, especially in the metro area. So Portland, Maine, saying there was just not enough inventory. More inventory would have provided increased home sales. And note that during the pandemic, we have even fewer inventory. And also compared to 2006, 2007, the middle of the chart that you see, where we had oversupply, we clearly don't have oversupply. So we do not have to worry about any price declines. I think the prices will hold relatively stable, very unlike the stock market with wild swings. You can say to your past homeowners, home prices remain stable, so at least the housing equity remain very firm throughout this pandemic period. The reason for the low inventory is the underproduction of homes, and this is the housing permits in Maine. So you can see for multiple years, it was below the red line. Red line I would characterize as more normal condition for the state. And mortgage rate I mentioned, I think it could potentially hit 2.8 or 2.9%. And I say that because the red line is the 10-year Treasury yield. And mortgage rates always follow that path. But the gap between 10-year Treasury and mortgage rate is actually a little higher than normal. So there is little room to go down. I know that for non-government backed mortgages, so mortgages that cannot be backed by Fannie, Freddie, or with FHA guarantees, that it is becoming very difficult. High credit score, maybe even 20% down payment. So hopefully you can have your clients go into those Fannie and Freddie backed mortgages because those are the mortgages only available in today's market. And also the NAR advocacy position for a long time has been that Fannie and Freddie need to have their government backing. Without it, we would suffer the consequences as what the jumbo market is suffering. So thank you for all your support, whether RPAC contribution or responding to call to action related to the need for government guarantee for Fannie and Freddie, because that is clearly providing the liquidity in this difficult time for the home buyers. Let's look at the coronavirus impact. We've been taking weekly survey of realtors, those with buyer clients, as well as realtors with seller clients. And this chart is very interesting. Let's focus on the sellers first, on the right side. 72% of realtors working with sellers are saying they will not be lowering the price throughout the pandemic. So what the sellers are saying is there was a housing shortage. They also witnessed some multiple bidding in some places, and they believe the pandemic period is of short duration or temporary at least. So when the market reopens, there's no reason why they should be reducing prices. What about the buyer side? Well, 37% of the buyers are indicating no reduction in prices. That's their expectation. And also additional 16% saying maybe less than 5%. If it's less than 5%, even in normal times, buyers usually don't pay the listed price. They go slightly under. So you can say that essentially half of buyers also expect home prices to remain stable. So the expectation is for stable prices. Economic logic suggests stable prices. Again, this is only a temporary dip in home sales, maybe a sizable dip for a couple of months. But once the economy reopens, buyers will be coming back, sellers will be coming back. And also, unlike 2008 and 2009, we don't have subprime lending that blew up, fortunately, in today's market. And second, we don't have overproduction by the builders. So home prices should remain very steady. And going into one risk factor more longer term is how are we financing all these unemployment checks or stimulus bill? We are running up huge budget deficit. And without going into technicalities, the Federal Reserve is pursuing something called quantitative easing, which means Federal Reserve is printing money, buying government debt, so the government can spend money on unemployment insurance and other stimulus measures. So all this spending is essentially printing of the money. When there is a large degree of printing of the money, if America was not America, we would have a large inflation. But people trust America, people trust the US dollar, and therefore we will not have inflation. But nonetheless, the inflation may show up, say, 4 years from now, 6 years from now, a little higher than normal. So the normal inflation is, say, 2%. 4, 5, 6 years from now, inflation could be 4% a year because we have so much printed money out in the marketplace. So some people want to hedge against higher inflation in the future. So some people will buy gold as an inflation hedge, a tangible asset, but also other people will be viewing real estate also as a tangible asset because real estate also has provided that inflation hedge in the past. So a large printing of the money, we have to somehow address this once this pandemic phase is over. But for a few years, given that the Americans are without income due to the government lockdown, certainly they should not be hurt by this lockdown. So stimulus help is clearly out there. Go to NAR website in terms of small business loan availability, which can turn into grants, meaning one does not have to repay. I mentioned about the unemployment insurance. Also, people facing financial hardship, they can skip out on mortgage payments. I think many of you are already aware of it. But also want to mention that NAR is providing right tools right now. Some of the courses are offered at a deep discount or essentially free of charge, so check into it. And also telemed programs that we are offering so that you can talk to medical specialists about certain issues without actually having to visit. So just check into NAR website for this information. And thank you for patience. These are unprecedented times and certainly a very difficult times. I've been staying here at home for a long time. It feels like Groundhog Day every single day. But we will come out of this. And once we come out of it, the buyers will be returning, sellers will be returning. We missed the spring buying season. So for 2020, I think the home sales will be down the very last line, maybe 5 to 10% down this year. But the prices will be overall steady in 2020. But 2021, everything should be running positive figures again. Thank you, and best to you. Stay safe.